important is very straightforward stuff, right? When you're on the floor of the exchange, there's the big board. The big board that when you're on the floor, it doesn't matter what pit you're in. The big board shows you what else is happening in the markets. And there's always a color attached to the big board. The big board is either green or it's red. And that green or red also has another number beside it, and that's what was the last price move. Is it an uptick, which will be green? Is it a downtick, which will be red? So the number will be green, and there will be a green number beside it. The number will be green, and there will be a red number beside it. That's the fact that the price is downticked on the previous tick. The idea is that the big board number, however, tells me whether the price is bullish or bearish. For floor traders, this was incredibly visual impact. It had a lot of impact on the floor traders because if the market was above yesterday's settlement, that means that the vast majority of buyers are obviously in profits and the vast majority of sellers from settlement are obviously losing money. So that's really useful information. So therefore, if you're above the RGL, the possibility of shorts getting squeezed is very high. The possibility of longs getting squeezed below the RGL is also very high. So when we see the prices below the RGL on oil this morning, the chances of the longs getting squeezed is very high, right? The big board is red. So we know that the longs are going to get squeezed. The longs are going to get squeezed a lot when the big board's red. And obviously every time the buyers came in, so we saw buyers coming in, we saw buyers coming in, and we saw buyers coming in, and they got squeezed. We saw buyers, including myself, coming in here, and they got squeezed. We saw buyers coming in, and they got squeezed. We saw buyers coming in here, and they got squeezed. All of these squeezes could be opportunities for you to make money on the sell side of this RGL. It's the big board. It's the most basic indicator that's ever existed on the floor of the exchanges. That's all it is. That's all it is. But that big board has made literally millions of dollars for anybody that's been in this room and followed the RGLs. And I'm not joking about that, by the way. A lot of people think that's not possible. If you took the big board trades, simply if you took the big board trades, when we head into the COVID period, as we told you to do, we said, look, this is the time, because it was a conversation, I think, with Nessie at the time. If you remember, Kim, I think it was a conversation with Nessie. And we were talking about the big board trades. I says, if you simply took the big board trades when the COVID whole problem kicked off, on a single contract, you would have made millions of dollars. You might be laughing at that, saying impossible. Go back and do it for yourself if you have a spare month to spend redoing all the RGLs. These RGLs are making $10,000 and $15,000 a day on a single contract because of the COVID mass falling price levels and all the massive volatile movements. They were making $10,000 and $15,000 days. $5,000 days was a bad day. $3,000. My God, how bad is it today? Fortunes made if you followed just the big board trades. Now, obviously, as far as I'm aware, nobody followed any of the big board trades. Because if they did, they will be able to tell you with 100% certainty that they made millions. So if you didn't make millions, if you haven't made millions in the last few years, it's because you haven't done the big board trades. Well, perhaps maybe it's time for you to revisit the idea. Because last night's big board trades on gold, $2,000 plus. Last night's big board trades on bonds, $2,000 plus. This morning's big board trade on oil, $1,000. Trading eventually, $2,000 plus. So if you haven't made $2,000 on gold, if you haven't made $2,000 on bonds, if you haven't made $2,000 on the short side of oil, maybe you need to revisit the big board trades. Because you would have made it if you traded the big board. Simple as that. You would have made it. So there's no real excuses, except for the fact that you can't trade the big board trades because you're not at your desk, but the big board doesn't go away. The big board is there for the rest of the day. literally the rest of the day, which is why we're trading the big board at 7 o'clock this morning. It doesn't go away, it's still here, because it's valid for the next 24 hours. So there isn't an excuse to not trade the big board. There isn't an excuse to not know what the big board is showing, because it should always be on your screens, right? Should always be on your screens. Because you need to know if you're trading against the big board or with the big board. You need to know if you're buying into a situation whereby you might be the guy getting squeezed, or selling into a situation where you might be the victim. You've got to know where the big board sits. That's why we've been spending years on the big boards. In vain, I said that to Kim last night. I said, it doesn't matter how many times, because Kim was asking to re-go over the RGL process. I says, it doesn't matter how many times I teach these guys the RGL process, no fecker does it. It doesn't matter how much money they see getting generated every day from big board trades, still nobody takes them. Even though they're the most obvious, cleanest, easiest narratives to trade, for whatever reason, they're maybe too easy. It's got to be more than simply red side or buy side or green. And yet, here we are with a massive trade on the big board. And again, how many people knew that this was red side only below the big board sells? How many people knew that it was buy side only last night when it went bid above the big board sells and then flipped into these chop phases here from the Tokyo market open? It feels like you're cheating. It feels like it shouldn't be this easy. It feels like, what the hell? How can you possibly sell at 76.62? It's the day low. The day low? And what? What, do you think day lows can't go any lower? Do you think day highs can't go any higher? Of course they can. So the sell that came in at 76.60s just made $2,000. Red side, big board, sell side only trades as a great opportunity. It's 1,000 times better than any trend line. It's 1,000 times better than any moving average, and yet there's millions of traders across the globe in the retail space losing money based on trend lines and moving averages every day. And yet these make money almost blindfolded. If we look at the big board trades on gold, you will be startled and amazed at their quality. So this was the gold big board right here. Sell side, boom, made money. Sell side, boom, made money. We had a change of value in this area. So it was buy side here, boom, $2,000 of upside massive profits off the big board green side. And the reason why we didn't sell this one was because we started to see a change in the overall storyline with the Japanese yen catching a very strong bid. I'm not going to sell the big board. I'm going to buy above it. So when I buy above the big board trade there and I pace 1847s, my drawdown in that trade was precisely nothing. Precisely nothing. And we went from 1847 to a high price of 1871 whilst we slept like a log, like a baby. 1847 to 1871, I might remind you, is $2,400 per contract with a drawdown of nothing, with a drawdown of zero, where you didn't even have to decide what side to trade. It's done for you. The big board's green, you're a buyer. If the big board's red, you're a seller, and that's all there is to it, if that's what you want to do as a trader. So obviously we get this brilliant ride north, and we finish for the day when we waken up. Oh, you finish for the day when you're waking up? What a way to make a living, right? You finish trading for the day when you're waking up. In other words, all the trading is done whilst you're sleeping, which is not a bad thing for a lot of retail traders. The less trading they do, the more money they make, surprisingly enough. And that's a great example right there, isn't it? That's a brilliant example. Now, is it a lifestyle? Well, not really. I mean, obviously, trading when you're sleeping, if you're a swing trader, that's normal part of your day-by-day process regardless. because if you're a longer term swing trader, you're perhaps taking a position for 1 or 2 or 3 weeks anyway. So having an open position overnight is no real surprise. But obviously, you know, if you're trading this not as a swing trader per se, then yes, you would have had to have traded for a few hours through this period up to about 2 o'clock in the London session morning, 1:30 when it went bullish. So obviously there might well have been a situation that you can't trade at that time of the day, which is absolutely fine. And maybe what happened is, and this can happen, and it is annoying when it does, maybe you finished at midnight. So you traded these sell trades here, made some money, stops at break even, scratched out, sold again, made some nice money, stops at break even, and when you woke up this morning, you've made $10 on the final bit of business. You made $10 on the final bit of business, but you made a couple hundred there, you made a couple of hundred there. So whilst it is only $500 or $600 per contract, it's still $500 or $600 per contract using the big board sells. Now, obviously, going to bed at midnight, for example, London, would have meant you wouldn't have been able to get the buy swing away from there. And that's just one of the prices you pay for a big board trade. Now, I'm not saying you can't have discretion. For example, if I saw the price going above the big boards here, with the Japanese yen, for example, selling like this, there's no way I would buy into that break higher. So there is a discretion that you can add to this. But what I'm saying is, I am not going to buy just because it goes above here. And you can also argue that you might not want to sell because it's in green. So you're taking that idea that if the value is bearish and it's below the big board, you're a seller. If the value is bullish and it's above the big board green, you are simply a buyer. And that's it. What a great systematic rule set. What a brilliant systematic rule set to play from. Because obviously it means that you're not necessarily involved in any of these sells, but you'd have been involved in all the buys on the way up here. And there was a lot of buy opportunities on the way up. There was a couple of swings, there was a couple of RGLs, there was a couple of TPs, tipping price trades. And you can see obviously you could have made a lot of money in the London session if you started early enough. It means that you haven't got any of these sell trades during this phase here, and you may actually have been able to take a little cheeky buy trade through this little bottom edge here because you are buy side only. And because of that, this could have been a possible buy trade there. You're only a buyer when it's green. And that gives you that systematic idea that I'm only bidding into this. I'm not trying to be a seller. Now, you could argue that if you liked enough, you might have decided to buy that value divergence there. I mean, fair enough. It still made money, right? 65s traded 68s, $300. And then this little cheeky buy trade at 64s traded 69s for $500. So that's still another $800 you made trading on the buy side of the RGL. Trading on the buy side of the RGL. And not even bothering about trying to get short. Not trying to get short, using the value divergence to then say, I'm off the trade and looking for the next buy. I'm off the trade and I'm looking for my next buy. And obviously as the price drops, there is no next buy. There is still no next buy. You're obviously watching this evolving story and you're only a buyer. How nice is it feeling to have that simple decision made for you? That's what the green numbers are there for. That's what the big board is there for. Now, you don't have to be that guy, but obviously it's a nice extra bit of information to allow you to make that decision. Trading against the big board is really tough, as oil buyers will obviously be able to confirm. Anytime I tried to buy against it, the sellers were able to squeeze the price lower. So if you just were sell side only, below the big board red side, you would have made 76 70s and eventually trading 74 20s for a $2,400 sell side only bit of business. You're not trying to buy any bottom edges except to take profits from your short sells. So you'd never have tried to go long here or here or here or here. Now that opens the door to a whole afternoon of doing nothing. A whole afternoon where perhaps you do absolutely zero. And you know what? Sometimes that's what happens. Sometimes that's what happens. You do nothing. They are called volatility expansion trades. So when you understand that these are volatility expansion trades, that's what you're trading for.